how to avoid suffering major losses investing in the stock market by doing this one thing. Then the first thing to know is to avoid this. The major risk in today's market is geopolitical risk, like election. I want to make this video just after Malaysian election, which is at a good timing when I publish this, but the same concept is actually applicable whenever you invest and wherever you invest. So if you really want to avoid losing lots of money, then it's very good to avoid politically linked companies. Politically linked meaning that the board of directors or the CEO and whatnot, they are sitting, those people in the higher management of directors are actually high levels people for certain political parties. So the outlook is when there's a change of government or change of state or ruling, the lawmakers and all that, especially if these companies are getting most of their revenue from projects that are awarded by the ruling coalition or government, no matter what party it is, then you see that whether it's due to some sentiment or due to fundamental, their stock counter will go down when there is any change of policies or any change of in terms of the government. Now, what's the difference in the government-linked company? These are not necessarily have politicians in their board of director or in their management team. They are mostly because most of the revenue or projects are derived from the policies that are being imposed or being made or being implemented by the current government or the lawmakers. So when there's another government or lawmakers takes over, some of these policies, some of the project might be scrapped. So if the major bulk of the revenue comes from this project, then basically you're losing a lot of revenue over there. Is what it means by government-linked company. I mean, I think a lot of people know what is government-linked company, GLC, but most people don't know what is a GLIC, government-linked investment company. Now, these are basically, they don't have politicians inside. Most likely not. They don't depend on government projects to survive, or they don't depend on the policies imposed by the current ruling government to generate revenue. But their major shareholders are actually bodies that are government linked. Example, if like Tenaga Telecom, CIMB at this time of recording, these companies, these counters where their major shareholders are actually Khazanah Nasional, which is an investment arm of the government. So these are what it means by GLIC. Now, when I say you avoid these companies because they are politically and government linked, I don't mean you avoid them due to sentiment. You avoid due to fundamentals. Let me explain more on this. Now, for example, in the as you know, might have already know, in the Malaysian General Election, AirAsia, probably the top low-cost airline originated from Malaysia and probably in the entire Southeast Asia, it did a PR stunt. It paid their airplane rate in support of the previous government. Their boss also did a video publicly on YouTube saying something that he claimed was very neutral before people go to vote for the election. But nah, I don't think that message was too neutral actually. But that's just my thought. Now the thing is, this is just a PR stunt, but upon market opening after the election, you see that its share price actually plunged. Now, this is a classic example of a sentiment-related stocks movement. Now, why I say so? If you want to so-called boycott airline of AirAsia, a major airline like that, but the thing is, there is no other major close enough competitor. Yeah, you maybe have a company Malindo Air and all that, but in my experience, the service isn't just up to par when it comes to AirAsia in terms of scale. So if you want to boycott AirAsia, anyone, you better have a deep pocket to take Singapore Airlines or take even Malaysia Airlines and all that. The reason is it's not really, of course, it's regulated by the government, but it does not depend. The revenue does not really comes from getting government projects. You don't even have, like active politicians managing or sitting in the board of directors. So this is one example of stock price movement due to political sentiment. And the other thing, of course, this is a negative way to look at things, and the positive thing is the example number two of sentiment related stock movement. We look at Opcom Holdings. It's all over in the news. You know that after the election, there's a regime change. The new lawmaker comes with a new prime minister. The prime minister's son happens to be the CEO of this company, Opcom Holdings, and within one day after the election, after the first trading day after the election, the share price actually jumped 50% in just one day. So this is self-explanatory. But people buy is because they have a sentiment that now this CEO is actually the son of the ruling, the prime minister. But actually, whether it makes profit or not is yet to be seen. Okay, the outlook doesn't become very rosy just, change of government within one day. So yes, it might make sense in the long run, but to actually have some counter that jump 50% in one day just really does not make sense. Maybe it makes sense in the long run, like I said, but more due diligence is needed to really drill into the fundamental of the companies. For AirAsia, I say the fundamentals, I think there's no close competitor, and I don't think those people who say want to boycott AirAsia is going to have a lot of impact on its bottom line. And again, people forget after 1-2 months from now, they will still come back to this, right? Because this is something like B2C business. The other thing is about politically linked counters like Media Prima and Star Publications. So these companies are not direct politically linked, but just because they are owned by political parties and they deem this political link, but their revenue is derived from advertising and all that, and regardless who are the political parties owning organizations like Media Premium and Star Publications, people, or those corporate like Nestle and whatnot, food and beverages, they are still going to advertise, put their ads in their paper or in TV and all these media. So it's not going to change a thing. But the thing that it comes to these sectors that are almost very often are actually linked to either their political link, direct political link, or GLC or GLIC. We look at these 5 sectors. One is construction, property, technology, plantation, and telco. Now I will go through in detail the first 3 a bit later, but let's look at plantation. Now plantation, they are not really related to political party, but because there is a change, let's say a new government comes into place and they impose a policy that, for example, there's a minimum wage of plantation worker of 1,500 up from, for example, 1,000 per month, then you know that the cost of business is going to go up, which may reduce the company profit. So if you are labor intensive, for example, in the plantation sector, then that is where you will be hit. Even though those company by itself doesn't really siding any parties, okay, explicitly, but because of these new policies, actually affects the bottom line of this company. And the other thing is about telco. Now again, telco, there's this manifesto by the new government that take or the new lawmakers that take over the government. It says that there's a manifesto to ask broadband provider to slash your broadband price by half, so more people can have broadband, but keeping the same speed. And this, you impact the bottom line, actually the upline of this telco company, maybe like Maxis Telecom and all that. So sectors that are, again, I stress, sectors that are fundamentally linked political faction and government policies, they must be fundamentally linked for it to justify why you should or should not sell down, should not buy or even buy all these companies. So when it comes to construction. These are because construction you cannot avoid from getting government projects, no matter which political party actually are in the government. Because construction and property sector, we are talking about infrastructure development and all that. And one good example is actually Gamuda. You can see the price, Gamuda price actually gap down, not only plunged, but actually gap down from I think about like 5 over ringgit to about 4. So that's like 15 or 20%. But the thing is, these projects, I mean, the company per se, Gamuda is one of the leading construction company in Malaysia. So fundamentally, they're actually doing a good job. They are competent. They are well known. They have great track record like MRT 1 and 2. They also are tendering pending from project from MRT 3, ECRL, KL Singapore, high speed rail and all that, and Penang Transport Master Plan. So these are all the projects that are into the pipeline that will contribute to the future revenue of this company. But unfortunately, as what the Prime Minister Tun Mahathir said,
what do you think of the high speed rail that's coming?
High speed rail, I think it's a little bit premature. What we need is the present rail to be improved. If you can do 180 kilos per hour, that's good enough. Because the distance is very short. It's not like China, or Japan even. There you take 3 hours despite high speed train. But here, Singapore to Kuala Lumpur, well, it's almost about half an hour. So, yeah, it's a good thing to come later on. But I think at this moment, I would rather straighten the lines, increase the speed, and that should be sufficient for us.
Now, you see that because they're going to scrap some of those projects, so no matter how good you are, you have to find your revenue somewhere. Because what seems to be in their hands already is going to go away. It's as simple as that. Now, compare that with a construction company like Ahmad Zaki Resource Berhad. From fundamentalist standpoint, they are not as well known as Gamuda, although it's quite a good company as well. But when it comes to the execution, they have like these are really have a direct political link. It means that there have to be a political person from certain party that's sitting in the board of director. They are in a senior management team, and sometimes when it's a very blatant political link, it seems like they're getting project just because there's a connection between the director of the company with the government, which happens to be the same political party, but not too much of the competency, and not because they deserve those projects and such things like that. So just be very careful. Gamuda, I think in the long term is still okay, but in the short term, because some of those projects are getting scrapped, so you have something happening, something like this. Now, this is an example of direct political link. It's again, another example of blatant, direct, politically linked counters. George Kent. What happens is George Kent used to be just a meter manufacturer, and it evolved into infrastructure developer since 2012. They're involved in all those infrastructure like Ampang, LRT line, MRT2 track works, and even government hospitals. And it's publicly known that the boss, the major shareholder of this company, is a golfing buddy of the former prime minister, which has lost in the recent Malaysian General Election in 2018. So that's why you see that the price actually plunged that much. When it comes to technology, now you might thought that technology are immune to all those geopolitical risks, but there are two flavors when it comes to technology company. So let's start with company like Vitrox. They are not really getting their business model does not depend on what this government is doing or government policies. They are most affected by things like global supply and demand in the semiconductor industry. Now, having said that, technology companies like MyEG, okay, MyEG, as you know, one of the project that they are doing is what we call the GST monitoring system and all the e-government service and all that. But with the change of government, the new government is going to tell, one of the promise is to scrap goods and service tax. So GST is going to scrap that, and for MyEG, their major revenue contributor going forward from here is really going to go down the drain, like major going down the drain. No joke. So these are what we call as a policy changes when you change government. So again, this another black swan, a bit of a black swan event, if you ask me. Now, I think this update I've given you enough perspective on how to if you want to avoid all these uncertainties, then in the future you just be very sure not to get exposed with all these company with either a subtle or a very direct political link. Now here I want to turn it to you. With all those sectors that I've told you, do you agree with what I say? And which stocks sector do you think is least affected by major downsides such as political and government related risks? Which stock sector you think? And are you going to buy MyEG now, which see their revenue is really going downhill from here because their project going to get scrapped, or you're going to buy AirAsia now, which actually is just because of sentiment, the price drop because of sentiment. And I want to finally close this with this lesson by our new Prime Minister Tun Mahathir, which really make me cry.
Meningkat. Dengan itu, rakyat yang dapat gaji lebih boleh beli lebih banyak daripada dahulu. Jadi kita nak tahu, tiap kali kita nak naik gaji, kita nak tahu kesan dia terhadap market, terhadap purchasing purchasing power dan sebagainya. Tidak semata-mata tahun ini kita naik 10%, tahun ini kita naik 25%. Seperti yang dijanji oleh Datuk Seri Najib. Bukan tambahan gaji yang penting, tambahan purchasing.
Finally, a lawmaker that able to speak like a logical human being, really can speak human language, 講人話 in Cantonese. So with that being said, I hope that this has been useful, and I will see you in the next episode.